From President Biden officially signing the executive order to early inflation estimates, some very important things are happening for cryptos. So let's talk about it. So the crypto market is losing momentum, and we are now seeing that crypto prices have remained in the red during the last 24 hours. The price of Bitcoin has fallen below the 40K price range yet again, while altcoins have been following its downtrend. And it appears that despite some positive points for cryptos, Biden's signing of an executive order on crypto assets has made investors uncertain. And this is why the crypto market has lost about $100 billion since the signing of this order. We know that the markets reacted positively to the buzz of the impending crypto executive order following a leaked statement from U.S. Treasury Secretary nominee Janet Yellen. She acknowledged the potential benefits of crypto. However, as Biden signed the order, the markets have given up their gains to put Bitcoin back below 40K again for the sixth time in as many days as they remain volatile. On the other hand, we are now seeing that the stock prices of crypto-related companies have jumped as the broader market reacted positively to President Joe Biden's long-awaited executive order. Coinbase surged up 10.5% at market close, while shares in Michael Saylor's MicroStrategy posted a 6.4% gain. Similarly, blockchain-related ETFs also enjoyed the market's renewed confidence in crypto, with ProShares Bitcoin Strategy ETF gaining 10% and Valkyrie Bitcoin Strategy ETF closing up 10.3%. So what it means is that the executive order was considered by most institutional investors to be, if not a net positive for the crypto industry, at least a lot less bad than had been feared. And while the crypto market has not reacted positively to this order, many people in the crypto industry have welcomed President Joe Biden's executive order on crypto. For example, the Blockchain Association of the USA is saying that we welcome this approach and are ready to collaborate with agencies on behalf of the industry. Similarly, Jerry Brito, executive director of Coin Center, sees the executive order as a good signal to serious people who've been holding back from getting involved. He said that the message I take from this order is that the federal government sees crypto as a legitimate, serious, and important part of the economy and society. And Ripple CEO Brad Garlinghouse is saying that the White House finally says what we and the industry have been saying for years. If the U.S. wants to maintain its status as a responsible tech leader, it needs to provide a clear regulatory framework for an industry that's exploding in growth. So what we are now seeing is that the executive order is actually going to be a good thing for cryptos, and it appears that it has just laid the foundation for the proper embracement of cryptos by the U.S. in the future. Moreover, shortly after its release, SEC Chair Gary Gensler took to Twitter to share his thoughts on the matter. Gary Gensler said that the agency will collaborate with government organizations to achieve important public policy goals in the crypto sector. So this is positive news because he is saying that the agency will be working to protect investors' interests. And this is important because if governments limit all these scams and risks from cryptos, then more investors will gain confidence to come to the market. Now another thing that is happening right now is that we are seeing new CPI data coming out pretty soon. And while we are not expecting this to be great, we are expecting consumer prices to set 40-year highs. But the good news here is that typically when we see inflation and all of this data come out negative, a lot of the time we see the crypto market respond positively to this. This is because most people believe that when inflation is going to be bad, the consumer price index continues to rise, so they look at some alternative investments like cryptos. So the point is that while we don't know the direct impacts of this just yet, what we do know is that inflation is here. So ultimately, this is going to have long-term positive impacts on crypto, in my opinion, whether we see volatility in the coming days and weeks. Meanwhile, we can see here that crypto analyst Matthew Hyland is saying that the Bitcoin daily candle is looking very strong today, but he is expecting more volatility in the coming weeks. He is saying that the CPI number is coming out tomorrow, and the FOMC meeting is coming in less than a week around March 15 and 16. So due to these things, he is expecting volatility ahead. But he thinks that there will increase certainty as a result of this, so this is going to be a good thing. All in all, I think that it is very likely we may see volatility in the coming days and weeks. But ultimately, in the long term, I think this will push more investors into the crypto markets as we continue to see tech companies struggle and a lot of companies just in the stock market continue to struggle. And with that being said, let's come to Dogecoin's price. So the overall outlook of Doge is looking bearish right now, and we can see here that it has been struggling around this 11 cents price range. This is happening because it is not only under immense pressure coming from these macroeconomic factors, it has also been facing constant rejection from the resistance level at 14 cents. Moreover, we can also see here that it has been trading below its crucial moving averages while the MACD level is also in the negative zone. However, as I said, this rising inflation is going to bring a lot of investors to cryptos in the long term. So we can expect Doge to make some positive moves in the future. And now, let's come to Bitcoin for a minute. So after the recent price surge, Bitcoin has fallen back to the 39K price region. This happened right after the official signing of the executive order as some investors became uncertain of its impacts. From a technical perspective, things are not looking too good for it as its moving averages and RSI level are now sitting in bearish territory. However, there are still some positive things happening for Bitcoin. So we are now seeing that the Bitcoin dominance rate has nearly reached an important diagonal resistance level, which could cause a short-term rejection, but it will then enter into bullish territory. Since February 28, the relationship between Bitcoin and the Bitcoin dominance rate has been positive. This means that an increase in one has caused an increase in the other. This is also visible by the correlation coefficient on the price chart of Bitcoin. So what it means is that if the relationship holds, a price increase in Bitcoin is imperative as the Bitcoin dominance rate is increasing. Another bullish thing for Bitcoin is that amid this price slump and all the global economic issues, a large number of Bitcoin holders are not worried about it. We can see here that about 83.8% of Bitcoin supply has not moved in 3 months or more. And this is just shy of the all-time high seen back in October 2021 of 85.4% and significantly higher than the 76.9% median seen throughout Bitcoin's history. So what it means is that a majority of Bitcoin holders are still believing that Bitcoin is going to rise from here. And this confidence of holders is actually bullish for Bitcoin in the long term. Meanwhile, crypto trader Brandt believes Bitcoin appears to be forming an opportune pattern and it is posting an intriguing technical setup. His analysis shows Bitcoin has now moved above a historic level of support and resistance at 41K while posting a higher low after hitting a bottom at around 33K. So he is predicting that something big is on cards for Bitcoin from here. Moreover, he said that Bitcoin is the king of digital assets and that traders who decide to rotate their Bitcoin holding into other cryptos might be kicking themselves in the future. On the other hand, legendary investor Bill Miller is also pretty bullish on Bitcoin despite its recent fall below 40K. He thinks that many countries will begin to use Bitcoin as a means of working around countries that seek to do them harm. Miller further said that he felt Bitcoin was something of an insurance policy and that countries could potentially use it to fight their way out of financial crises. And there is a very high-stakes game theory at play here, whereby if Bitcoin adoption increases, the countries that secure some Bitcoin today will be better off competitively than their peers. Meanwhile, Anthony Scaramucci has issued a bold Bitcoin price prediction, forecasting that Bitcoin will hit 100K within 2 years and ultimately climb to 500K. He thinks that Bitcoin will have 100 million plus wallets and it could be an inflation hedge, but that is a good 5 to 8 years away. He further said that Bitcoin is early adopting technology and it will be very volatile. He believes that there will be periods of time where Bitcoin will crash. But if you're willing to zoom out and look at the long-term chart and look at the adoption story, Bitcoin gets to 500K a coin. And now, let's come to some important cryptos updates. So we are now seeing that asset management firm Van Eck is targeting both traditional and novel investors with a new ETF that tracks the performance of crypto and gold mining companies. The ETF will invest at least 80% of its assets in securities in a global index, and it tracks the performance of companies engaged in gold mining and crypto mining activities. So this is positive news as it will provide more opportunities to institutional investors to start investing in cryptos. And talking about crypto investments, the founder of Alpha Wealth Group, Tom Fortino, believes that cryptos could be a good option to add to your retirement investing plan. From a personal standpoint, Fortino said he is more of a gold person since it has acted as a historical store of value and has a limited supply. He believes that Bitcoin and crypto cannot be a similar store of value, but that investors can still make money on them. And now coming back to Dogecoin, we have just seen that despite the current bearish sentiment, the long-term outlook for it is still looking pretty bullish. And this is why I think that we can expect some massive moves from it from here. In any case, what are your thoughts on this? Where do you think Doge is heading from here? Let me know in the comments section below.